What's going on? Welcome back to the channel. So today we're going to talk to you about Hertz. They just dropped their earnings recently. I want to go over the absolute key highlights from that you need to kind of take away, as well as go over some of the support, resistance points, and what analysts are saying. So I'm going to go over all the things that you need to know, but first make sure to hit that thumbs up. And with that, let's get right to it. So on Friday, Hertz did close at 405, going up 3.72%. So that's the market encumbering their earnings. Looking at this though, they did miss on earnings per share as well as revenue by 93.8 million. So not necessarily the best. I'm going to go over the future guidance near the end of the video, but aside from that though, with it closing in the green, 3.7%, the anticipated implied move was 11.97% in either direction. So in all honesty, it was rather timid. So again, that's kind of a good thing all in all. So let me know your viewpoint on that. When it comes to shorts though, shorts actually did return a significant amount leading into their earnings. So they did even themselves anticipate Hertz to kind of move higher. So that's something to kind of keep in mind. I'll take a lot of this off so you can kind of see it a little bit better. So they were kind of increasing and then just abruptly leading into the earnings did return. So kind of a good thing, but 35.09% of the free float is being shorted, works out to be 42.44 million shares. So this stock definitely is very heavily shorted, but aside from that, 697,000 shares were increased on Friday. So shorts definitely did try to suppress it at all costs. Quickly going back over here, the day range on Friday, $3.86 the low, $4.12 the high. So kind of volatile all in all. But aside from that, of the call options that were purchased, you see a consensus for it to be roughly around that $4 range. Not much options activity, as you can kind of see. Bears are anticipating for it to be sub 350. It's kind of weird to see actually with so many different chains. So they have weekly chains, but yet it doesn't actually seem to be all that popular for whatever reason. So just generally on Friday, there was only 68,000 in total premiums. So very low stuff. Day prior, 671. Day prior to that, 486,000. So yeah, it's very unusual to see that level of option chains available, like kind of the weekly and also monthly chains, but yet it puts out this amount. Very weird. But aside from that though, with it closing at 405, it is trading between these 2 points. So this R1 and the pivot, 397 is going to be that next strong support that you'll really want to watch for it to hold. And then essentially $4.33 is that next strong target / resistance that if obviously the Hertz is going to have any sort of recovery, broader market, that's going to be the next strong target that you'll really want to watch for it to kind of get above. So just take note of some of the strong support and resistance points. Aside from that, looking at what analysts kind of gave for ratings, so it looks like there was only one, and that was a $3 hold rating by Deutsch Chris, who has a 47% success rating. So not all that great. Similarly to the options, it doesn't look like it is that popular with analysts. Surprisingly, you actually did have a rating done 3 days ago, so 2 days prior to the earnings, and I never really understand that. Even there was another 6 days ago as well. I don't know why analysts give ratings before earnings. It doesn't make sense whatsoever. Both were sells, $3 and then $3.30 for the price targets. Bank of America, Barclays, as a consensus though, 308 is that price target, representing a 23.86% downside. So let me know your viewpoint on that and give yourself a shout out if you have been buying, if you've been selling, what have you been doing with Hertz. And then one final thing, pop over to 𝗖𝗢𝗡𝗘𝗖𝗧, link in the description below and also the comments. Sign up and you get all of this information completely free. So analyst ratings, forecasts, ownership, everything under the sun. Definitely recommend everyone to have this because it has so much information, whether it be shorts or even just Elliott wave technicals. There's a lot of good information there. But like I mentioned, I'm going to go over the actual future guidance and some of the absolute key highlights from their earnings. So make sure you guys hit that thumbs up. And with that, let's get right to it.
Hertz targets sub $300 DPU by year-end 2025 with fleet rotation progress. Earnings call insights, Hertz Global Holdings, Inc., HTZ Q 2024 Management View. 𝗪𝗠𝗧𝗛, CEO, outlined the company's progress in implementing significant foundational changes and highlighted the Back to Basics roadmap focused on fleet revenue and cost management. Over 60% of Hertz's fleet now consists of vehicles 1 year old or less, with a goal to complete the fleet rotation by year-end 2025. The company sold 100,000 vehicles in Q4 2024, utilizing both wholesale and retail channels, with an emphasis on growing the retail channel through partnerships and digital enhancements. Hertz introduced new senior leadership, including Chris Berg as Chief Administrative Officer and Doria Holbrook as EVP of Mobility, to strengthen the company's transformation efforts. CFO Scott Harrelson reported Q4 revenue of just over $2 billion and adjusted EBITDA loss of $357 million. He emphasized the company's disciplined fleet management and cost control, stating, "We still expect to exit the year at our target of below $300 a month per unit." Outlook. Management stated that the company aims to achieve a sub-$300 DPU by the end of 2025, supported by lower depreciation costs from newer vehicle purchases, enhanced retail sales channels, and seasonal demand patterns. Revenue and EBITDA guidance remain directional, with an expected seasonal EBITDA loss in Q1 2025, break-even in Q2, and a sizable EBITDA profit in Q3. The company anticipates a low single-digit EBITDA margin for the year. CEO 𝗪𝗧𝗛𝗛 reiterated confidence in completing the fleet rotation, stating, "We are turning our fleet from a headwind to a tailwind for the business." Financial results. Q4 revenue of just over $2 billion compared to analysts' revenue estimate of $2.13 billion. Adjusted EBITDA loss stood at $357 million. Fleet utilization improved by 270 basis points quarter over quarter, despite similar seasonal demand patterns. Depreciation per unit (DPU) for Q4 ended higher than the guided range of $350 to $375 due to wholesale vehicle sales during a seasonally softer period and lower than forecast MMR values. Operating expenses reflected declines in labor, maintenance, collision, and supply chain costs year over year. Although insurance reserves and lease liabilities impacted overall cost structure, liquidity remained robust at $1.8 billion. With $500 million raised through new senior secured notes to support fleet rotation and operational plans. Q&A. John Babcock, Bank of America Merrill Lynch, asked about metrics to gauge progress. 𝗪𝗧𝗛𝗛 responded, emphasizing the importance of achieving sub-$300 DPU and improving utilization through process efficiencies and retail channel expansion. Chris Woronka, Deutsche Bank, inquired about long-term margin targets. CFO Scott Harrelson pointed to the company's North Star metrics of RPU above $1,500, DOE in the low 30s, and sub-$300 DPU as guideposts. Dan Levy, Barclays, raised concerns about the impact of competitor fleet rotations. Scott Harrelson reassured that Hertz is well-positioned with locked-in favorable economics for its model year 2025 purchases and a diversified supply chain. Harold Antor, Jefferies, queried about vehicle disposal strategies. 𝗪𝗧𝗛𝗛 emphasized the shift toward higher-margin retail sales channels, stating less than 10% of vehicles are now sold through auctions. Sentiment analysis. Analysts focused on operational progress, but pressed on EBITDA losses and liquidity concerns. Tone was neutral to slightly negative, with skepticism around long-term margin improvement. Management maintained a confident tone during prepared remarks, but was more defensive in Q&A, particularly when addressing DPU performance and liquidity strategies. Compared to the previous quarter, analysts showed increased concern over competitive pressures and cash flow management, while management demonstrated consistent confidence in achieving strategic goals. Quarter-over-quarter comparison. Guidance language for DPU improved, with a firmer commitment to sub-$300 levels by year-end 2025 compared to prior expectations of low $300. Strategic focus shifted more prominently toward retail car sales and operational execution, with new leadership hires reinforcing these priorities. Analysts continued to press on fleet rotation and liquidity, but showed heightened interest in competitive positioning and demand trends. Management's confidence in achieving fleet rotation and cost targets remained steady, while analysts displayed more skepticism compared to Q3. Risks and concerns. Challenges include lower than expected vehicle residual values and the need to optimize a retail sales channels. Insurance costs and lease liability accounting changes are expected to remain headwinds into 2025. Analysts raised concerns over the impact of competitor fleet rotations and the company's ability to sustain liquidity during ongoing fleet investments. Final takeaway. Hertz Global Holdings emphasized its progressive fleet rotation and cost management while targeting a sub-300 DPU by year-end 2025. Despite reporting an adjusted EBITDA loss and lower than anticipated Q4 revenue, management expressed confidence in its strategic initiatives, including retail car sales expansion and operational efficiencies. Analysts highlighted concerns around competitive pressures and liquidity, but the company's focus on achieving its North Star metrics remains central to its transformation strategy.